Has your business got enough money? Well, let's find out. As a business accountant, my team and I spend all day long helping business owners on their journey. And I'd say from experience, one key area that the vast majority of small businesses kind of neglect, and they certainly don't have, is any sort of cash flow planning. And oddly, it's one of the key things. If your business is going to run out of money, then it's going to end. It doesn't matter if it makes profits on paper, it's just not going to exist if you can't pay your bills to keep it running, right? So it's quite a big thing. But most owners, I think, tend to look at the bank balance and think, yeah, is there enough money? And they might have a little note of what they need to have in the bank at certain times and things like that. And that's all a really good starting point. But I want to talk something about a bit slightly more formal. And really, I think the initial thing, if you've never done this before, what we're talking about is the next 3 to 6 months. That's kind of the main point. If you've never planned your cash flow before, saying I'm going to do 2 years, a lot changes in 2 years for a start, but 3 to 6 months is going to be really quite a powerful tool for you to understand, has your business actually got enough money? And the reason that's important to understand is because you want to know, with everything you're investing in over the next 3 to 6 months, have you got enough money? If you want to grow the business, if you wanted to take on your first employee, for example, or a new employee, or invest in new equipment because it's coming up to your tax year end, and that would be a really good idea to do. Like all these things, you don't know, and clarity is one of the key stressors. From my experience of working with small business owners, when they're really stressed and getting a bit of angst around it all, a lot of the time it's just clarity and the lack of it. And this kind of cash flow planning idea really helps you get into the zone of, okay, knowing almost for certain, have I got enough money to do these things? And also particularly as we're recording this in early 2023, when the UK is going through some quite tight financial times, there's a lot of cost rises, margins being squeezed, all these things. Knowing and playing around with it to see, well, what's the worst case? What happens if my customers start paying late? What happens if actually we don't sell as much? All these kind of things. You can plan it out in this exercise and have some sort of idea of, should you be worried? Is it okay? And get that clarity that you need. Now, to help you with this, you could do it on pen and paper. And I know in the early days of business, going back many years ago, I used to do this. I used to literally, how much money do we need before the end of the month to make payroll? That kind of stuff. And that's a really good laser focused activity. But when we're talking about this, it's best done really in a spreadsheet. I mean, these days, most people are pretty good to be able to just plug some figures in a basic spreadsheet. So talking of basic spreadsheets, if you want a free kind of tool to help you with this, and don't judge me if you're a spreadsheet whiz, this is a proper basic version of it. In the description below, I'll drop a link there to a free, we don't want your details or anything, you can just click a link and it downloads an Excel spreadsheet and you can kind of play along with that and help you plan what we're about to talk about. Now, it's one of these things that you can take it to the next level. So after you've played around with it, these spreadsheet, if you're in a cloud like products like Xero or QuickBooks, there are some great online kind of cloud tools as well. So something called Float, for example, that links to those, and it uses your real-time data to kind of move the cash flow forecast along, and they're really cool. So if you want to take it to the next level after this, and when you've got your basic one set up, do investigate those because they're properly cool. Now then, this spreadsheet, all these spreadsheets and these cash flow forecasts really is, what's my opening, it's like a guess really, what's my opening bank balance going to look like every month? Then here's a guess at my income and expenditure, and that's what's my closing bank statement. That's how much money I should have at the end of the month, and it just shows you each month. And that's really what you're looking at, because if it's gone into minus, then you might have a problem, you need to sort something out. Or if it's getting a bit tight, those months you might really need to keep an eye on when you're paying things. So it gives you that clarity that we keep talking about. So in terms of actually creating it, it's fairly straightforward. If you use that template, you're just going to guess what your income is, and you're going to guess what your outgoings are. Put in any tax payments, or a guess. So, if you're VAT registered, it's always difficult, but try and guess what your VAT payment might be. Or if you've got a team, you might want to guess what your payroll payment would be in terms of to the team and then to the revenue. So put those kind of things in. But, on a simple level, ins and outs, and it will show you your bank balance. Then looking at that, then if it's okay, and you think, okay, well, I would like to do some kind of sensitivity sort of changes, like we're talking about, I would copy the tab, just literally right click it, copy it, and then play around in that tab. What happens if people start paying late? Because of the financial times, one of the things we're seeing at the moment is that there is a trend of late payments, and Xero particularly, they do a big study and gather figures, and they've seen a trend of late payment going on 6 odd months where it's getting worse. So that might be one of the things you look at is, well, what happens if actually I don't get as money in each month, this money in as much as I think I'm going to each month, and you just kind of bump it like that. How's that going to look? What if I do take on that new employee and I have this extra wage cost, or invest in this new bit of equipment, and just stick those in, but copy the tabs if you like, so then you don't actually break your well, this is what happens if we don't change anything scenario. And hopefully that's an exciting thing where you're like, okay, we're okay on money, but what happens if we spend some? Unfortunately, for a lot of you, that might not be the case. You might be looking at it thinking, uh-oh, we've got negative numbers in here, like our bank balance looks like it's going to be in a bad time. What can we do about it? And firstly, well done, because now you know. You're not going to get there and think, oh wow, what we're going to do, we've got 5 days to figure out how to pay our rent. You know in advance that that month might look a bit dodgy. So then, you need to go to a list of things. Now, obviously, you could start thinking about loans and the like, but I kind of want to push them to one side because, yeah, there's obviously a cost to those. There's a time in terms of arranging it. Have you got the affordability and the history to go to a bank and ask for a loan? If you're new to business, possibly, probably, and quite likely no. And then, do you really want to go to your friends and family asking for loans? Like, it's difficult. So I'm going to put them to one side. One thing though, if you are thinking of finance facilities that's worth looking at, is just have a look at a basic company business credit card. Because if you think about it, when you buy it at the point of sale, what happens is you're not paying it, the credit card company are paying it. Then you wait till you get a statement and then they give you a good old 30 days to pay it without paying any interest. So it does delay payments. So that can be a short-term boost. So think about that one maybe. If it suits your particular circumstances, have a look. But let's look at the practical things you could actually do. So the first thing is if you invoice, let's say you're a consultant and you invoice people, have a look at your credit control procedures. Do you know who owes you money right now? A lot of businesses don't. They're just like, oh, actually I'd have to go and check, but keeping a close eye on that is really important. And then thinking about what's your kind of credit control procedure. Does somebody check that recently? Do you have somebody regularly send statements, contact those people that are overdue? It's amazing how much extra cash you can bring in, particularly as your business grows, and that quite commonly, that's one of the areas that gets lapse, is what you dedicate in. Are you dedicating time in the diary if it's just you or a small team, or if you've got bigger finance people, what are they doing about it? And think about those things and just think, can we do anything to chase up? Because in the vast majority of cases, in all honesty, people are just forgetful. It's not top of your people you've invoiced. It's probably just, they're like, oh, I can't be bothered, I'll wait till Friday to log on the bank, or maybe they haven't got it, maybe it's gone to their junk mailbox where email's concerned, especially if you're emailing it from something. So just talk to them and you'd be amazed at the amount that comes through. But that's like an ongoing action that you want. Now, while we're talking about invoicing, the other thing that's worth thinking about, and there's almost, these things could be another video in themselves, right? Some proper top level for you, is think about the terms you're giving people. If you're giving people 30 days to pay these invoices, ask yourself why. We see a lot of new businesses where they're given 30-day terms and you ask them why, and they're like, I don't know, I just thought it was a done thing. So no, bring it to 7. You've done the service, let's have the money. So think about how you do those. You might even think, actually, can we move to something where we get paid up front? Can really help generate cash flow, but those systems are really important. And then look at the barriers that you've got around it. Is it difficult to pay you? Are your bank details on the invoice, for example? Does someone have to contact you? Have you got direct debit card machines? Like, is there other tech involved? Because again, using studies show that payment tech helps you get paid quicker. So think about all these kind of things. And then on the other side of it, the money you owe to people, are you paying within terms? Now, I would never ever say pay late. It's a massive problem in the small business world. If you've read anything the Federation of Small Business have put out for years, you'll know that it's one of the big things they campaign for is this paying on time, and it's a real problem. I mean, the average amount that's owed to a small business is somewhere in the region of about 25k at any one point. An average, this is based on some data from Xero in recent times. Now, that's a really big deal. Now, and that's over terms as well. That's not just like generally. That's over the terms you've given them. So never pay late. But do think about because I like this. I love this idea that you want to be a quick payer. So you get an invoice and you pay it. But actually, if they're giving you terms, if you just looked at those and paid when it's due, you can actually add in a lot of cash into your bank on an ongoing basis just by holding it there. Now, if you're working with really small suppliers, you might not want to do that. You might want to, or if you do get in that position where you're like, actually, we really need to just pay to terms, really, then maybe it's worth getting in touch with them and just saying, look, I know we're really sharp payers, but actually we've just had to change a few things around given the time at the moment. So just to let you know, we're going to pay on time, no issues, but it might not be as promptly. You can have those kind of discussions with people you work closely with. But honestly, that's a big one. And also in our world, we see a lot of people paying tax early. So they'll do payroll at the end of the month and then pay the tax immediately. Well, the tax isn't due until, like, say, the middle of the following month. We'll just wait to the middle of the following month. And you'd be amazed the combination of all those things makes to your actual cash balance. As I say, it's probably a video in itself to go into those in detail, but there's just a couple of things that you could do to kind of bring that cash in and hopefully generate a bit more funds for yourself. So the action I really want you to take away from this video is just to download a template or boot your own spreadsheet up and just look at those bank balances, have some sort of idea of what's happening. And actually, if you're in the cloud, some of the software providers are now building these things in, so they'll even give you an estimate. The only issue with them is, I think at the moment the tech's in the early stages, and I wouldn't necessarily trust it over your spreadsheet. If you ask the vast majority of accountants how they do a cash flow forecast, they export data into a spreadsheet and play around with it, albeit some of the apps that bolt onto some of the cloud products are really good. So, but yeah, please just go do it, book time in your diary. And I obviously I love numbers, so I'm going to tell you it's an exciting thing. thing, but honestly, it's quite a fun exercise, I think, and it's certainly an eye-opener. Hope you've enjoyed this video. If you know anybody that needs to know this information, please do share it. Like, subscribe, and all that lot, and I'll see you in the next one.